Adnoc Drilling, the Middle East's largest drilling company, has reported earnings for the first half of the year. Revenue growing 30% to $2.37 billion. Net profit coming in at $692 million. That's an increase of 21% on year. Adnoc Drilling will also pay $217 million as a second quarter dividend in August as a stream of big project wins fuels profit. The company secured contract additions of $4.8 billion in the first half of this year. Youssef Salem is the Chief Financial Officer at Adnoc Drilling and joins us now live for an exclusive interview. Youssef, good morning to you, and thank you for joining us so promptly after the release of the earnings. Run us through the report card here. Coming in pretty strong, but I want to know about the growth drivers. Are these numbers sustainable?
Good morning. Thank you so much for having me. They're fully sustainable, and that's why not only have we delivered record results in the first half, but we also upgraded the guidance for the rest of the year, which means actually in the second half, the numbers will be even higher than the first half. Because as you said, the drivers are fully sustainable. One is growth. We've reached a record footprint, both in terms of our rigs fleet, reaching 149 rigs, as well as our regional footprint, expanding to 2 more countries in Oman and Kuwait. Second is our profitability has reached the best in the sector, with now exceeding 51% EBITDA margin on the conventional business and reaching 35% return on equity. And third is technology, with now multiple AI technologies implemented across our fleet. These efficiencies are now fully sustainable. So the growth, the profitability, and the technology make these earnings sustainable into the second half and well beyond.
We're looking at top line of $2.37 billion. I'm looking at a target or a forecast of $4.8 billion by the end of this year. Are you going to be able to achieve that?
We're fully on track to achieve our guidance. We've upgraded actually our guidance. So both on top line, bottom line, free cash flow, and net profit margins, we've upgraded all these targets, and we are well on track to achieve them. Similarly, on the dividends side, we've distributed our second quarterly dividend now to all shareholders in the next couple of weeks, which is another $217 million of dividends, which effectively makes us the only company in the UAE which distributes a progressive quarterly dividend. And this is again sustainable because of the free cash flow we've generated, where we grew 67% free cash flow. And that's why we've committed to a 5-year at least progressive dividend off the back of the sustainability of these free cash flow, which is also backed by winning new contracts of $5 billion in the first half, the highest ever addition to our backlog.
With your record numbers and as the Middle East's largest drilling company, talk us through, or are you able to share with us your utilization rates for your rigs, both onshore and offshore?
We are more than 96% utilized across our fleet, and this is because we have long-term contracts which run up to 15 years with Adnoc, and that's because we serve Adnoc's long-term plans to achieve 5 million barrels of oil capacity by 2027 and significantly increase the gas capacity as well, both across the conventional resources as well as the unconventional, where we've drilled over 40% of the $1.7 billion unconventional program we've received to date. And hence we have long-term visibility. These contracts run until 2040 and beyond, with tens of billions of dollars of backlog.
I'd like to know about your expansion plans. The company, of course, continuing to expand operations as well as partnerships. You're looking beyond Abu Dhabi into Kuwait as well as Oman. Are you able to share with us the details of this?
Yes, earlier this year, we've acquired a 70% stake in SLB's land drilling business in the region, which includes 8 state-of-the-art rigs in Oman and Kuwait, serving 2 of the biggest clients in the region, Kuwait Oil Company in Kuwait and PDO in Oman. These rigs have been there in Oman, for example. SLB has been operating for more than 55 years, serving the requirements. Kuwait is going on a significant expansion plan, ramping up its capacity to more than 4 million barrels per day. So we're providing a key enablement now, not only for Adnoc, but also for other regional oil and gas companies to achieve their capacity targets. We'll continue to expand further and gain both market share organically and potentially inorganically in these markets as well.
What about the venture with Enersol and Alpha Dhabi Holdings in terms of a target investment of $1.5 billion, the investment into technology? How is that going?
It's going extremely well. We've already completed 4 transactions under this joint venture, totaling more than $750 million of acquisitions. These are 4 AI companies, which basically implement AI in terms of computer vision, real-time analytics, predictive analytics, and other advanced manufacturing techniques implementing AI. These have more than 140 patents between them, now effectively housed out of Abu Dhabi, effectively exporting this IP to the world. Effectively now we're serving more than 40 different countries, more than 50 upstream clients in these countries. We'll continue to complete another set of acquisitions between the end of this year and beginning of next year of more than another $750 million. And effectively this is part of a wider program that Adnoc Group has, which is Energy AI, to implement AI technologies to unlock additional efficiencies, safety, and profitability for the group.
Now, you said a key word there, AI and artificial intelligence. We seem to be talking about this all the time. In what ways will artificial intelligence be used in your industry?
Safety, profitability, and growth. On safety, we are implementing cameras across all our rigs and vessels, which allow us to utilize computer vision to pre-alert before any potential accident, and hence getting our people off hazard way in real time. 2 is profitability. With more automation, we are able to do more with less, and we are able to focus our people on moving more to real-time remote centers where they're able to have more upskilling and be able to have higher value add from their side. And then 3 is growth. With AI implementation in terms of the digital twins of the reservoirs, in terms of autonomous well control, we're able to unlock more value from the resources. So with AI hand in hand next to our people, we're able to keep them safer, more productive, and grow more.
Are you investing in this artificial intelligence, in this technology, in terms of lots of chatter in the space when we're looking at funds like MGX looking to invest into Anthropic, and funds coming in, or I should say chips coming in from NVIDIA into the Middle East market? How is Adnoc Drilling investing into its AI?
We're making substantial investments. So first, we're investing $400 million in new 6 AI-enabled rigs. These rigs would come with full automations on them in terms of computer vision, automated equipment, autonomous drilling. In addition to that, all that $1.5 billion investments in Enersol will ultimately be into AI. So in total, at least $1.9 billion investments into AI. We also have Turnwell, our unconventional subsidiary, which is now drilling sections of the wells on a 95% autonomous, utilizing AI. And effectively, this joint venture has a contract of $1.7 billion. So that's another substantial investment being made into the AI space.